For decades, we've all operated on one simple truth. China is the world's factory. Simple. But what happens when that factory decides to completely rewire its entire assembly line? Well, that is exactly what's happening right now. So let's take a look. Let's trace the wires of this massive economic transformation and see where they lead.
At the very heart of this whole story is one single profound shift. You see, the old model, the one that, let's be clear, lifted hundreds of millions out of poverty, it was all about quantity. More exports, more buildings, more GDP points, really at any cost. The new model, it completely flips that script. The new goal is quality. We're talking about growth driven by innovation, sustainability, and high-tech manufacturing.
So, this brings us to what we're calling China's Great Economic Pivot. The leadership in Beijing looked around and realized that the old playbook of hypergrowth just isn't sustainable anymore. I mean, the environmental costs were becoming way too high, the debt was piling up like crazy, and the whole model was just too reliant on cheap labor that, frankly, isn't so cheap anymore. Now, take a look at this, because it really lays out the change so clearly. The old growth drivers, fixed asset investment, think building cities from scratch, and just sheer export volume. The new drivers, consumption at home, innovation, and services. The old industrial goal was to be the world's factory, right? Low cost, lots of workers. Now, the goal is to be a manufacturing powerhouse, high tech and high value. And you'll notice the environmental target has gone from basically an afterthought to a mandatory priority. It's a huge shift.
Okay, so if the old model is broken, what's the official replacement? Well, it all comes under this one banner, the High-Quality Development Blueprint. And this isn't just some catchy slogan. It's a top-down, centrally directed mandate to rewrite the very rules of how the Chinese economy grows.
So what exactly is high-quality development, or HQD as you'll hear it called? Well, it's the formal strategy laid out in the 14th Five-Year Plan, and it prioritizes the composition of growth over the sheer size of it. In the real world, this means funneling investment and policy support toward innovation, trying to boost the spending power of its own citizens, and making environmental sustainability a core economic goal.
Now, to get how this actually works, you have to understand the system itself. From Beijing's perspective, they call their model socialism of market, and they argue it allows a pretty dynamic private sector to thrive right alongside a dominant state sector. But a lot of analysts on the outside look at the same system and call it state capitalism. They point to the government's really tight control over the market to hit its strategic goals. The key thing to remember, though, is that at the end of the day, the state has the ultimate power to steer the economy and make sure the market serves its long-term vision.
And the number one tool for steering that economy? It's the Made in China 2025 playbook. This is the industrial policy sitting right at the heart of the whole HQD strategy. You can think of it as a national mission to dominate 10 key high-tech sectors. Everything from robotics to aerospace, with the ultimate goal of achieving technological self-sufficiency and moving way, way beyond just assembling things.
And if you want to see the results, wow, look no further than this. Just look at the new energy vehicle or NEV sector. Through massive state support and really strategic investment, China hasn't just competed, it has achieved near total dominance of its own domestic market. So this isn't some theoretical plan for the future. In key sectors, it's already a reality. But, and this is a huge but, making this pivot is not easy. It's a battle against some really powerful forces. Basically, the legacy of the old model. There are three towering headwinds that are threatening to pull this entire project right off course.
The first headwind is a debt bomb. I mean, the old growth model was just fueled by borrowing, especially in the property sector. We've all heard of giants like Evergrande collapsing under $300 billion of debt. But the bigger, more systemic issue might be the hidden debt that's lurking in thousands of these local government financing vehicles, which now threaten the financial stability of entire cities and provinces across the country.
The second headwind is demographics. For the first time in modern history, China's workforce is actually shrinking. Now, this isn't just a social issue, it's a mathematical drag on the economy. Projections are showing this demographic cliff will shave about half of a percentage point off potential GDP growth every single year for the next decade. That really adds up. And that brings us to the third headwind, the consumption paradox. For the new model to work, Chinese citizens need to spend money, but they don't. An overwhelming majority of households, we're talking nearly 2/3, consistently say they prefer to save rather than spend or invest. This creates a huge, gaping hole in domestic demand. So why are they saving so much? This quote really gets to the heart of it. Without a really robust public healthcare system, pensions, and unemployment insurance, families feel like they have to build their own private safety nets.
They're saving for medical emergencies, for retirement, for their kids' education. This precautionary saving acts like a massive brake on consumption, holding the whole new economic model back.
So, this brings us to the global ripple effect. Because China's internal economic struggles, they don't stay within its borders, not at all. They spill out and directly impact the global economy in some pretty profound ways.
And here's exactly how. When your own citizens aren't buying enough of the goods your factories are churning out, you have to sell them somewhere else. This weak domestic demand is a huge reason why China is pushing its excess industrial capacity out onto the world, and that has led to a staggering, record-breaking trade surplus of over $1 trillion.
And you have to give it to them. Chinese exporters have become incredibly savvy at navigating protectionism. When they get hit with tariffs in one market, say the US, they strategically reroute exports to new markets in Europe, Southeast Asia, and Latin America. They also use some pretty sophisticated techniques, like transshipment, which is basically rerouting goods through a third country, like Mexico for the final touches, to get around direct tariffs.
The West's response to all this has really come together around a new strategy: de-risking. Now, this isn't about completely decoupling economies. It's more of a targeted effort to reduce dependency on China for really critical supply chains. We're talking about things like the rare earth minerals you need for electronics or the components needed for green technology.
So, given this massive economic rewiring project and the powerful headwinds it's facing, where is China headed? Well, experts tend to see three broad scenarios playing out over the rest of this decade. The first, and probably most likely scenario, is a kind of managed stagflation. In this version, the government successfully keeps the debt crisis from exploding, but growth slows down a lot. The economy does transition to high-tech, but because domestic consumption stays weak, it has to keep relying on aggressive export strategies, which means ongoing trade friction with the rest of the world.
The second, more optimistic scenario is a successful rebalancing. In this future, the government makes a truly historic fiscal shift and builds out a comprehensive social safety net. This finally gives households the confidence to spend, unlocking a massive domestic consumption boom. The internal market becomes the true engine of the economy.
And then there's the third, pessimistic scenario, fiscal erosion. This is basically where the government's financial foundation cracks under the pressure. The hidden debt bomb proves too big to manage. It cripples local governments, stalls innovation, and erodes confidence both at home and abroad, leading to a long period of economic stagnation.
So the transition is underway. The challenges are absolutely immense, and the global stakes couldn't be higher. The choices made in Beijing over the next few years won't just determine the fate of its 1.4 billion people, they're going to reshape the global economic order for decades to come. The crucial question that remains is, which path will it be?